Hello, good evening, everybody. My name is Kiran Menon, research analyst at Xtadict India, and this is another recording for today's analysis on currencies and commodities. This would be a wrap up into whatever the price action that we believe would be initiated through the economic indicators that has to be reported today. And by economic indicators, I would like to inform you that we have, I think we have one of the best economic indicators, or the most important economic indicators, perhaps for the month itself. Right. For obvious reasons, we have the reason why I said the most important is because of the FOMC interest rate decision. Of course, once again, interest rates are expected to be unchanged at 0.25% from the Fed, from the US Fed. However, what would be in focus would be the press conference from the FOMC president, that is Ben Bernanke, and considering whatever the liquidity which is seeping out from the market, resulting into a credit crunch situation. I believe he may take a decision on an extending factor of Operation Twist. Now, everybody, what is Operation Twist? It was initiated back when QE2, quantitative easing 2, was given in by the U.S. economy, where it was such that uh, the long-term bonds would be actually bought by the U.S. federal, and the short-term bonds, which is comprising of 6 months to 2 years, would be sold off. Now, the reason why they do this is in order to fund a certain amount of liquidity inside the banks. And when they buy a long-term amount of long-term bonds, they are actually paying in money where they have where they would be actually be the borrowers of long-term funds, and be lenders on short-term funds. On short-term funds, when they lend money, I'm sorry, on short-term funds, when they borrow money, they will be able to give money back into the market on a short amount of period of time, possibly also keeping the credit situations are stable. Now, everybody would may decide, or may expect a possible quantitative easing from the U.S. Government or the U.S. Federal Reserve, but I don't think that's going to happen, because first of all, you need an approval from the congressional budget, the CBO, Congressional Budget Office, the CBO in U.S., which is absolutely against pumping in more money into the economy, because if it does happen, all the money would be diverted towards Asian markets and emerging economies, which would then result into high amount of inflation. And thus it's not the growth which Asian markets is worried about, is because of the inflation. As a dollar becomes more and more stronger, inflation is the one which which happens to be in concern for countries such as India, because they are a net importer nation, not a net exporter. And if the money is flowed into the market, a free supply of currency or money into the market, the free flow of supply, or hot monies, as we say, would actually boost all currencies and commodities to higher level. And commodity, when I say commodities, it also means oil. India is a net consumer of oil. It does not produce or export them, it imports them. Okay, so I would be, considering all those factors. This is just one of the factors. Considering few of the factors, that is, I would expect QE3 not to be said as such, but possibly Bernanke was said that he would take more steps, right, and when there will be trouble in the economy and such. So what I would definitely see is that there might be an extension of this Operation Twist. That means interest would be kept low for another year or so, possibly this whole year. And what I would be expecting is that they would continue their selling on the short-term funds, and buying on the long-term funds, in order to stabilize the markets. And when that happens, I think there would be certain amount of bids, increased bids, that is certain amount of buying in the market, not to an immense rally, but to a certain amount. I mean, I would be very skeptical if Euro USD would reach or breach 1.2850, stating if they announce to extend their Operation Twist program. So 1.2850 is the maximum what I'm looking at, and possibly I would again initiate a short out from there. 1.2850 is just the tentative levels. Again, it is subject to change as and when technical indicators would tell me as to what particular level I'll be comfortable to go short, right? So moving on, we'll have the economic, we have the charts that took taken place. I was kind of very skeptical to go short on Euro USD. However, I did go. Still don't know why I did that, but anyways, I did initiate a certain amount of short level at these levels at 2695 and book profit at 70. It was about 25 pips, but that was the best I could get, because there was another 25 pip rally right till 2705 levels, right from 27 1.2 2670 levels. So bounce from 2670 to 27, that was like about 37 pips. However, the markets are quite choppy. It is not moving anywhere, and I don't think that there would be any sort of movements expected until and unless we have the FOMC rate decision and the press conference thereafter. So guys, trend technicals may possibly, this is the only fundamental yet where the fundamental would come ahead of technicals. It's typically where the technicals would come ahead of fundamentals, because technicals is nothing but the behavior of market, how market wants, if it is comfortable selling or if it's comfortable at buying. Therefore, I actually am just waiting at the sidelines. However, got an opportunity to go short over here, and I did so, made about 25-30 pips and got out from there, right? So therefore, I would like to wait for a clear conviction as to, oh, should I continue on its sell because of considering the economy is very poor, or should I would buy considering that QE3 bets has been increased immensely. That would be only in focus tomorrow, right? Let's move on to pound. Pound, of course, it has a very different story. The amount of swings that we witnessed was much higher than what a Euro USD had. Let's take out the 4 hourly chart. I love this setup over here. Just love the setup over here. Just playing on the levels, right? The levels which I have been put forth. I did go short at these levels, booked about 80 pips. Was Can't complain about 5735 levels is where I went short at, and I booked profit at 5660. So that was the target which I achieved, about 75-80 pips in store. However, the levels are playing out very fine, and the support of 5650 was held at 38.2% retracement. Very strong support had come in there. Moreover, I think there was a certain amount of overselling done in the 30-minute chart of GBUSD, which actually uh, gave a thrust, an upside thrust for in the same. So what I would see right now is that I'm so sorry, right, as I was saying, the the GBP USD gave swings, gave swings, much bigger swings rather than as compared to the Euro USD. First of all, we had the data, the BOE minutes, wherein it was decided that there won't be any asset purchases, and the same, and the people said that there won't be any interest rate cuts further, which actually gave GBP USD its interim strength. However, what I feel is that post QE3, as and when this QE3 or FOMC press conference fade away, GBP/USD will tear apart. It will go breach of 1.58 levels. This is what I'm looking at in GBP USD. Furthermore, I'm still long from Friday at 5606 levels. I'm targeting 5770, and after that, I would be possibly revising it to 58 to 5850 levels as such. So what I'm looking out is that I'll be just waiting for the QE3 decisions for but obvious reasons. I'll be doing so, and as and when the decisions would be final, as and when the effects of that fundamental would wear off, I would go long on GBP. I would do so. The setup is quite healthy as such. Even though the jobless claims came in poorly executed, there was a fall in GBP as such. But that recoupment, stating that there won't be any asset purchases, has actually given interim strength in GBP, and I think it has full potential to go on the upside. I'm betting it would come till to 5850 levels. So I'm just waiting for today to end, the session to end, and let's see what is going to be panned out for us. Audi USD, same setup, no difference. Gave a breakout yesterday on the back of QE3 expectations. Went short over here, however, got stopped out, and after that I went long at 1.62 until came till 200. However, what I'm looking out is that this has been very choppy since Monday as such. So I'll be again looking at the FOMC rate decision for a clear conviction. Goal two would be, the levels of 1610 on the downside, and on the upside it would be 1621 are just playing along quite range bound with the is that the range bound is quite on this side, and in gold as such. All right, so this would be it. This is what I would only have in store, where I would tell all the clients or traders to not to initiate any trades from their end, until and unless a clear conviction is being received. And if I were you, I would actually wait for the FOMC press conference to get over, so that I would have a definite view as to what market has decided to strategize, or possibly take strategies based on his comments as such. Right, so traders who are waiting for the data, please do so. It will be a much safer bet if you do so. If not, then please be careful while initiating the trades. Make sure the trades, the market would be very choppy, movement would be very quiet. So I don't think traders would be very happy in trading for about 5 to 10 meager pips. If you're looking out for a good swing amount of swings, then I don't think it will be provided until FOMC press conference is over. So everybody, so I would like everybody to strategize on the trade, on their trades, considering what would be the comments said by US President Ben Bernanke. All right, so this would be it for today. I would come back tomorrow and we'll discuss more about what's the outcome of the FOMC press conference, and the effects that it would show possibly for a short amount of time frame. This is Kiran Menon once again, research analyst at XDirect India, signing off. Thank you.